hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Oh man, good morning everybody. It's Friday. It's the first day of the month. We got monthly candles. Big day on the morning show today. Good morning, good morning, good morning. We have Louis, our resident crypto trader, joining us in a few minutes. We have Todd Gordon joining us today as well. So a lot to get to in the chat. Good morning. If you're watching us on YouTube, hit that like button for me, please. Let's roll.
Hey, buddy. How you doing?
It's December. How does it always happen so fast every year?
As Scotty B is saying, winter is coming. Winter is here. For you guys, at least, right?
I don't know. Winter connotates like depression, but it's like summer in the stock market, right? Because everyone's in a good mood.
And snow. And there's been no snow up north yet, right?
Not in New York, not where I live.
Yeah.
But in Michigan, certainly there's been snow.
No,
yeah. In Vermont, there's been snow, just not where people actually, not where most people live, I think. But
so it's also not just month end. So we'll talk about monthly candles, but it's Crypto Friday. Very special guest.
Yeah. By the way, JC will be here in a second, but we wanted to start with Adam, so we did, because that's what we do here. So a lot to get to, Steve. Do you want to? Where do we even start? You want to just start with like your favorite monthly chart?
You don't want to hit the big news of the day? I got one I could talk about.
You say big news as if I'm supposed to be able to read your mind. There's like 4 things that I would guess are the big news of the day in your world.
What would you guess? I would love to hear this.
I would guess Uber. There's a report from Barron's that they could join the S&P 500 as soon as today. I would guess that's your big news. I would guess. What else would I guess? I would guess Disney declaring what appears to be a one-time dividend. This is the big news.
Really? No kidding.
Yeah. I would guess Pfizer halting the trial of their obesity drug is big news. I don't know what you think is the biggest news, but that's what I would guess.
The secret is there was no news in particular that I had on my mind. I don't see the Disney news, but I would love to talk about that. Let's jump in and talk about some of these candles first.
All right. State of the market. Let's go.
So the monthly candles that stand out the most are really in tech. But I was just talking to Fonz offline, and he's right. If you're looking internationally, well, goddamn, look at this candle from Argentina. Call it, I guess, it's engulfed 2 months, just about. It's close enough. But it's more where it's happening, right? Not only was the price action just so, let's see, how much did, this is ARGT, right? The Global X FTSE Argentina. So not only was this thing up 31.5% in the month of November, basically ran all the way to the first Fibonacci, just about. But look at where it happened, right? You got a textbook retest of this base breakout, this multi-year base breakout. You got a touch in 2018, a touch again a few years ago. You got the move higher, retest, 2 months down, and now off to the races. This one looks as good as anything. Most of these international indexes are sideways, really rangy, especially the more you zoom out. But it seems like the best ones are starting to go around the world, and that's never a bad thing, right? You don't want a bull market that's just kind of confined to the United States or a certain region. You really want to see global participation. And in fact, you want to see the most risk on or offensive countries, something like Argentina, lead, right? Just like we want to see the most offensive groups or the growthiest tech stocks lead in the stock market. Does that make sense?
Yeah, it's almost like as if every asset class or sub asset class has parts within it that are high beta names,
Yes.
and you want to watch out for those, right? It's almost like that.
Absolutely. So you want to see the risk on stuff lead is, I guess, the bottom line.
Risk on, yeah, the better way of putting it.
Talk about crypto too. Speaking of risk on, I think these coils are looking awfully ready. Do we have? Oh, actually, I won't steal Louis' thunder. We'll wait on crypto.
Don't steal Louis' thunder just yet. Louis is going to come on in like 5 minutes or something. So don't steal Louis' thunder just yet.
He has so many charts.
I know.
I'm looking through them now, getting excited. Let me hit on Pfizer quick. Throw up this Pfizer chart. Let's just go there.
All right. So Pfizer had news here this morning, and news is
this the worst COVID? Is this the worst COVID hangover in the entire stock market? I mean, Clorox had a bad.
No way, man.
Had a really bad one. Zoom had a bad one, but this is Pfizer. This is a Dow stock. Like, come on. To think that their business just became all about these pandemic bills, down 40% this year. No good.
Oh,
hey, buddy.
JC with the bear market red shirt today.
You like that? You like that? I don't have any Christmas clothing, so we're taking my daughter to the city for the first time ever. First trip to the city. So my wife says, wear something Christmassy. Like, what does that even mean?
You look like Santa Claus.
You like that?
Yeah.
That's as Christmassy as I get. By the way, can I just say something? I love the fact it just brings a tear to my eye, hearing the morning show. I'm not around and you guys are talking about Argentina to lead the way. I mean, it doesn't get better than that. This is like Spencer never thought that he would be here, leading off a show with an Argentina ETF. Right? How about that, Spencer? Look at that. So Strazza, a nice job. Just wanted to throw that out there.
I'm going to pitch the same question to you. Is this the worst COVID hangover? Throw up Pfizer again. It's down more than 50% from its highs. Stock has been cut in half.
Worst COVID hangover you don't think is Zoom?
I think Moderna is really bad too.
Moderna is probably the worst COVID hangover.
I like how you put that, like COVID hangover, because that's basically what it is, right?
I mean, look at Clorox; they're everywhere. Is Peloton a COVID?
Yeah, for sure.
Would you say these stocks are suffering from long COVID? Would you say that? Hey, I'll have my soundboard hooked up over the weekend. I'll be able to do sound effects next week. But
show it.
What?
Pfizer. Yeah, 1 second. I think Fonz is having some internet gremlins today, so I'm going to bring it up right now.
Clorox is down. Clorox is off 50% from its 2020 highs too, or was just last month.
You're such a cop out, Strazza, with your the best chart, best monthly chart is tech. Such a cop out.
Well, it is. I mean, you can get creative and find some others, but it's really. Go ahead and take your pick. It's one of these tech subgroups, is it not?
Yeah, what are you going to say? Semis, right? You know what I mean?
I mean, I get what you're saying. It's boring. Everybody's probably going to say semis, but it's pretty damn good, right?
I mean, throw up slide 2 there. You could really, I mean, what are you going to say? This is not the best chart? I mean, it really tells a really interesting story. Did semis technically close at a new all-time monthly closing high, 160.62? Yes, officially an all-time high for semis as well.
Yeah, and in a lot of these, JC, they're so clean when you zoom out on the monthly. Like if you look at like an XLC or IGV, you have like the 3-month bull flag that you can so clearly draw, and then just an explosive resolution in the monthly.
Slide 3, Spencer. The new slide 3.
The other slide 3.
The other Lebowski, the millionaire. The new all-time highs for semiconductors. So I would put the XLK, I would put that big stick as number 1. That Argentina ETF, though, nice call out. Why does it take the Latin kid to call that out, huh? How come the gringo from Connecticut didn't bring that along? See how that works? Funny how Latin Strazza becomes all of a sudden because he hangs out with Alfonso all the time.
Yeah, I'm a bandwagon guy when it comes to stocks.
As am I. Nothing wrong with that. That's we get paid to do that, right? You suffer with your sports teams and you stay true, right?
Big game tonight. Big game tonight.
Who plays tonight? What game?
The Washington-Oregon game for the Pac-12 championship. That's what Steve was referring to.
That's a big game.
UConn, Kansas.
Oh, that is a big game.
That is a big game.
Like no joke.
If a game this early in the season meant anything.
They should have been number one. I was hoping they would hold the number one rank.
Strazza is one of those guys that takes preseason polls seriously.
Oh, they're fun.
Not preseason anymore. We're into the season.
Wait a minute. There is an analogy to be made here. Preseason polls are to college sports what year-end price targets are to.
I like that, Spencer. I like that.
The market.
Like that. That's good.
There's fun to be had here, right?
Big analogy guy.
I like that, Spencer. That was a good one, though. That was a good one. That was a good one.
I do like it. I like analogies. Thank you very much.
We'll be here all day, folks. Keep them coming, Spencer.
Yep.
All right. What else?
Okay, can we throw up slide 4 here? Let's just zoom out here. I don't know if you guys had a good monthly strategy session last night. I had a Barolo with mine. I can't help myself, man. You know, how do you not drink a Barolo after a month like that? I'm looking forward to seeing the stats. It was like, I don't know, one of the greatest months in the history of the stock market.
Big month.
It was the 18th best month for the S&P since 1950.
What about Russell's?
I don't know.
All right. What about Q's?
I also don't know.
I'm looking forward to seeing that. Not that it actually matters, but just sort of to reiterate really what a solid month it was. And by the way, November on a pre-election year is supposed to be a solid month, so I don't know why anybody should be surprised by that. But what I am kind of surprised about, to be honest, I
got something for you. Hold on.
But hold on. Look at this. Look at this number. This is 60%. Technology up 60% since the S&P bottom last October. That's a lot, dude.
That's like 10% 6 times.
Something like that. I think Nick Mangioli might have some something to say about that. But
20% is a new bull market, according to the Wall Street Journal. So we've had 3 of them.
Dude,
right?
60% for technology, 50% basically for the Qs, 50% basically for communications. S&P's putting up a 30 spot. People are telling you this is a bear market. Let's can we talk about that for a second before we bring in Louis? Like, what could you possibly be thinking when you're looking at what's happened over the last year and you're like, oh yeah, classic bear market? I don't like. What could you be looking at? I don't understand.
Pop quiz for you. November monthly performance. Tech obviously led. That's why they're the best candles. What was 2 and 3? Name me. So tech led 12.5%. I'm looking at the equal weights.
Real estate was probably 2, right?
How'd you know that?
Communication services.
I do this every day. I don't know what number 3 was. Maybe communications.
Nope. You guys are never gonna guess it.
Utilities.
Nope.
Yeah, healthcare. I don't know.
Don't sleep on this candle either.
What?
Is there a I don't know. I don't want to cheat.
Come on, guys. JC, you've been talking about it. You've been asking your friends. You said nobody's talking about these stocks for next year.
What, financials?
Financials.
Yeah.
A cool 11%.
Hold on. I have consumer discretionaries up 11%.
Told you it's the equal weight sectors. You can't do this at home.
Oh, you're doing equally weighted. Got it. All right.
Yeah.
But on a cap weighted basis, it's technology 1, real estate 2, and financials are basically tied for 3rd with discretionaries.
Just like my equal weight saying 11.04% for financials, and then I'm seeing an XLF 10.94, so basically the same thing.
Yeah. Industrials up almost 9%. S&P's up over 9%. Q's up almost 11, dude. Dow up almost 9. everything was up. Everything was up except energy. So you're really seeing that strong positive correlation between the dollar and energy's performance. When the dollar weakens, all these cyclicals and growth stuff are doing well. And when the dollar's strong and some of those other areas are under pressure, you're getting that bid in energy. That continues.
And even the Dow is one of those monster monthly candles that we could talk about. 350 points away from a new all-time monthly closing high.
It was up like 3,000 points in a month.
I can't wait for the stat guys to start dropping things today, because this was like, I mean, monster month for the Dow.
Who's the best stat guy?
Dietrich will have some good stuff on this.
Who's the second best stat guy?
Grant.
Charlie Billow.
Shout out Grant.
Grant Hawkridge.
Grant Hawkridge.
JC, I'm surprised you're a points guy. Up 100 points, down 100 points. I'm surprised.
Why?
Points are because
it's old. It's an old piece. It's like an old person thing. That's how they.
It's a traders thing. Traders trade in points.
It's true.
Yeah, traders don't be like, oh, I crushed Amazon today. That 3% move. No, Amazon ripped 40 points. I made a bunch of money.
But then I have to. It's like then I have to go and remember, like, okay, where was the last time? Like, at what price did I last see the index at? So like then I have to like do the math in my head, and like, is that a lot? Is it not a lot? It's like an extra step.
I'm gonna go with I'm right on this one.
Fine. Okay. Enough of this. Let's bring on Louis.
The people that are upset that the Dow is quoted in points. You quote the Dow in points.
All right, enough of this. I'm bringing Louis
300 points today, 200 points. The Dow lost 400 points, 100 points. You're talking points. Ooh, the Dow was up 0.87% today.
Yeah, is that not more relevant information? Whatever. I'm bringing Louis on. Forget it.
If you
got my fingers on the post, avocado and toast, leather seats, jet plane, always ready to go.
First of all, the Louis definitely the new best intro.
You think?
I think so.
That's quite the title.
I like it personally. I mean, Sean's is good, Mary's is good, but I don't know. It's
straight, sweet to the point.
I like it. I like it. By the way, if you can't do the math on what the percentage move is on the Dow based on the point change, then I'm sorry, I don't know what to tell you. Be better at math, I guess. Like that. This is just, right? Where's the Dow? On 36,000, right? So if the Dow goes up 360 points, that's a 1% move, right? If it goes up 300 points, that's like close to a 1% move, right?
I mean, I'm lazy. It might just be like a young person thing, but I definitely like percentages. I think it's easier.
When I was younger, I used to think that way too. It's true. I did. I used to be a perma bear. Also, I mean, not a perma bear. Kind of. I was definitely a gold bug. But yeah, Listen, we got to teach Louis the ways. Louis does a good job of paying attention and listening. Strazza has his moments. Strazza sometimes says something. I was like, man, he's actually listening. And then sometimes I'm like, oh, he's not listening.
Did you know, Louis, the third best performing stock this month in the high cap 1,000? It's 1,000 stocks. Coinbase.
Yeah.
Wow. I did not know that. That's very impressive, actually.
Only behind Affirm and Roku.
This is for the month of November?
Yeah.
And where's Uber? Uber's got to be up there. Uber went up like every day.
It's interesting that Bitcoin and a lot of cryptos are consolidating recently.
Technology did too, though.
And a lot of the crypto equities.
Yeah, but didn't technology and home builders and a lot of these other things kind of act that way also?
Uber's number 44.
Wow.
Yeah, it's just a lot of growthy tech stuff on that list.
Yeah, look at communications over the last few weeks sideways. Look at technology over the last few weeks sideways. Homies. I mean, there's been a lot of consolidation. So the fact that Bitcoin has done that too, I guess that shouldn't be that surprising.
Yeah, but the point is that a lot of the crypto equities haven't done that, and so they're continuing to really rally.
That's actually a great point. That's actually a great point.
What's the best looking
what do you got
monthly?
Yeah, what talk to me.
I mean, we can start looking at some charts. We can pull up the Bitcoin monthly candlestick.
Please.
I don't think there's a better long-term monthly candlestick chart than the Bitcoin one. just long term.
We don't get a Crypto Friday bumper. What's up with that?
Come on, let's go. Let's go have a look at some charts.
Yeah, come on.
What is this?
All right, what do you got?
Let's pull it up. So I wanna start with the top down process on slide 6 here. And I just want to have a quick description of how we approach crypto as an asset class, because a lot of people view crypto as an independent asset class that trades by itself, when in reality it's not like that at all. We know that the correlations are there with legacy markets. And so if we can have a look at slide number 6 there.
Yeah, one second.
This is
all right. I got you. Louis, not Louis. Fonz is having an internet problem, so I'm getting the slides up. There we go. Okay.
Cool. So this is the top-down process. So we can start at the top with risk markets, then we can work our way down to what the correlations are acting like. Then we can work down to Bitcoin. We know that Bitcoin is the driver of the asset class. Then we can get a little bit more granular. We can do a lot of our breadth work where we actively quantify these trends. Then we can work down to the altcoins and have a look at individual trades. And so if we want to have a look at the next few slides, we can go through them rather quickly because we've been talking about them all week. S&P 500, uptrend, not a whole lot to talk about here. Consumer staples trading lower on a relative basis. Next chart, we can see that sentiment, an opportunity, everybody's sad and miserable. Next chart, semis are breaking out to all-time highs. And the next chart, we can see that the correlation is there with equity markets. And so there was a brief decoupling, but now that correlation has returned. And so when we move on to what the Bitcoin monthly candlestick chart looks like, we just got the monthly candlesticks. I know how much, it's a religion around here. We love the monthly candlesticks. It's 30 minutes a month, but that 30 minutes is some of the most valuable time spent as a technical analyst. And that's,
somebody's paying attention. You see that?
I mean,
listening.
That's one thing that JC's certainly taught me, working with him, is just, it's a 30-minute exercise. And if it's incredibly valuable because it really helps to set a foundation for the next month. And so it really gives you a foundation to what the primary trends are acting like. And so what do you think about this monthly candlestick chart here, JC?
I mean, the trend is up. We've talked about that. As soon as it started taking off above 30, 31, you can't be short. And the risk is really for investors that you're not long enough. I mean, that's how I've approached it even before it broke out above 31,000. I mean, I'm in, I think, and I'm personally, I don't think I'm in a position to say that I don't own enough. I think me personally, I'm good. I would venture to say that 99.9% of investors in the world don't own enough. I believe that. Now, everyone's free to do whatever they want. It doesn't matter to me. Just observing, I think that the majority of the population is irresponsibly underweight, and I am okay by that. Okay with that. I'm actually thrilled about it. In fact, because there's there's so much cash to be put in there, and I stand to take their donations. Is really what my plan is.
Hey, it's not really our problem if they're just not looking at the data in front of them.
Our only concern is that they're going to chase, and that money that they're chasing is going to go into our wallets. And I look forward. I very much look forward to continuing to accept their money. Listen, by the time they're telling your parents about it on the TV, then
it's time.
Yeah. So what's the strategy?
The strategy is to stay incredibly long against 31. No.
Is it more complicated than that? Are we just buying Bitcoin? Or are we buying other things?
Yeah, and so when we look at the relative trend, so if we can go to slide 16 there, that's the relative trend of our broad-based crypto index relative to Bitcoin. I have made some slight revisions to a lot of these breadth metrics that I've presented here previously, just to make sure that they're the most accurate representation of the asset class. And so this broad-based crypto index is approximately the top 100 market cap coins, and I've equally weighted them. So it's a rather accurate gauge of what's happening underneath the surface. And so there is still work to be done here. It's still carving out a base. But you can see that we've had a bullish momentum divergence as we made that new low. Price has rallied above broken support whilst hitting overbought conditions in the process of doing that. And it's defending that key level of support that I've drawn on the chart here. And so a little bit more base building required, but things are moving in the right direction for altcoins on a relative basis.
You want to know why this chart excites me? Because we haven't even got started yet. Like there are some very clear leaders that have got started and completed bases, but this is ARK, this is speculative tech, this is small caps, micro caps. You can almost not even see the base yet because it's still just getting going. So I think finding the ones that are breaking out with these little bases already, way ahead of the game. I mean, just look at this. This is first inning of a reversal type stuff. We already see it beneath the surface. We see the breadth expansion. We saw the momentum thrust with percentage of coins getting overbought weeks ago. And now we're starting to see, one base, two bases go. Ethereum still hasn't completed its base.
You know what I think this is a good example of? I think this is a great example. When you hear a lot of people and they're like, oh, a technician would be buying this, or a technician would be selling this chart, or whatever it is. It's less about one individual chart. It's less about what this specific pattern of our custom crypto index relative to Bitcoin with a 14-period RSI and like this very unique data set and view of the market. It's less about that and more about what else is happening around it, right? We're putting this chart within the context of all these other things. So in the environment that we're in, based on a zillion other things that we're looking at, it would suggest to me that the path of least resistance in this particular chart is higher, right? But if we were in a different sort of environment, I don't necessarily know that I would look at this chart with that amount of conviction. I might even have a different answer, right? You feel me on that?
Yeah, it's
absolutely. And as Peter says in the chat, it's about the ecosystem of charts. And so
that's right.
That's why I wanted to just to briefly touch on the top-down process, because it's very much it's obviously dependent on Louis is Sean White of crypto. Not sure who Sean White is. I'll take that as a compliment.
Yeah, that's a good compliment. That guy has more gold medals. That guy's the man.
No border.
I mean, before I go, let's quickly go through some trade ideas.
Yeah, I want some ideas.
And so perhaps we can maybe go slide 21. Fetch AI. That's AI has seen a really nice relative bid. I'm doing a lot of work right now to try and quantify a lot of sector rotation within crypto. We all know that there are different sectors within crypto, but no one's really explicitly quantified that. So that's what I'm in the process of doing right now. And AI is certainly one of the leaders, just like in the equity market. And so Fetch AI, it's pressing up against new highs and above 57, we'll say 60 cents to make things clean. This thing is, a nice clean trade back to 120, which is, a double.
Yeah, I like it.
And this is how small is this? We are talking about the 105th largest cryptocurrency, currently right around 440 million. So small, not irresponsibly small, but certainly down the cap scale. So keep that in mind. This is a small cap stock, would be the equivalent in market cap.
It's also got AI in its name, so keep that in mind.
Would you say that is a good thing or a bad thing?
I don't love it.
You don't love it? In the crypto space, I think that's got to be a good thing. Even if it has nothing to do with AI.
I just have to go to slide 25 and 26. These are two lovely charts.
Helio.
TIA, that's shaping up very nicely. It's a recent ICO, and TAO. Nice pennant there. I know Steve loves his flags. He loves measuring flagpoles.
Yeah.
The TIA is really interesting. That's a recent ICO. It's over $1 billion, by the way. Currently the 52nd largest cryptocurrency. That's a real market cap of $1 billion.
And then TAO has a market cap of 1.6 billion. It's obviously had a very nice run, so this would obviously be more of a short-term trade to try and trade that breakout from that pennant. But it's been nice.
Is everything okay with you lately? You're doing all right? I see the black background charts. I don't know if you're sad or we banned these from the chart report. What is wrong?
Wow, Strazza banning the black background charts. They are pretty ugly. But the rest of the charts are nice. Louis, listen, don't let him talk to you like that.
Hey, thanks, JC.
You tell him. I was in
a
black background kind of mood. So shove it, Strazza. Tell him. Don't let him pick on you like that. I listen, Louis, bring it in the heat. I like it.
Helium. Do helium real quick. Do helium.
Yeah, please.
I'm not sure whether I think I made the mistake of not including a helium chart, which is a little bit irresponsible of me.
Not the one you wrote about this week.
Yeah.
Here, I'll drop it in.
But it goes to, I just think it's a good point, right? We were talking as a team earlier this week. And what was I saying, Louis? I said, time to be aggressive. Right? Like these reversals are just completing. Go way out. Let those price targets really run. If it's a new crypto bull market, I'm not looking for a 20-30% move. I want a double or a triple, or in this case.
Well, in the case of helium here, it's a 10x. So from $2 to 20. And so look, this thing fell into a 98% drawdown. We all got our helium miners just as a little fun experiment. Now talking about sentiment, we completely forgot about our helium miners
all over the world.
And a 98% drawdown. And now we're seeing the 200-day moving average curling up. We're seeing a nice base being built. What's there not to like?
I don't know.
What moving average is that?
That's I'm looking at a weekly chart here, but it's a 200-day moving average.
Nice. Good. Trend is reversing.
I like it. Yeah. Louis Sykes live from New Zealand. What time is it over there in New Zealand? You Kiwis ever sleep?
It's 3 a.m. here, so I'm always passionate to come on at 3 a.m. on a Saturday morning to come talk about crypto with you guys.
We appreciate it. Now go on a nice run, right? Get out there, go on a 5-6 miler.
Go to bed.
No, man, go on a run. Watch the sunrise. Come on, you live in beautiful New Zealand. Take advantage,
bro. Wellington is so beautiful.
You'll be living in
love
Brooklyn.
being here.
You're gonna be in Brooklyn. Walking over, bums pass out on the side of the street, and you're gonna be like, man, should have gone on that run when I was living in New Zealand.
Hey, I'm looking forward to being in New York as well.
I look forward to seeing you in New York next month, as a matter of fact. All right, Louis, you're the man.
All right.
Have a good run.
Guys.
Good.
I have something to say.
Of course.
By the way, Louis, great job as always, bringing the heat. That the Dow Jones Industrial Average has only had a higher monthly close once in history, going all the way back to Charlie Dow in the 1880s.
Yeah, I just said that.
Did you?
Yeah. We're like 300 points away on a monthly closing basis. 350 points?
Yeah, I think JC was, that was before he hopped on. Maybe it wasn't.
Yeah. About 300 points. How about that? Only one close higher, which was that December 21.
The Dow candle looks as good as any.
Man.
We talked a few weeks ago on here about how ARK had its best week ever. This is, still part of that week is included in this month, but it just had its best month ever now. So.
Yeah.
Right. So best week ever, best month ever, all in the same month.
Yeah. The riskiest stocks, some of the most offensive stocks are having their best performance ever.
I know. I certainly take offense by it.
Can't we get these amazing runs during periods of like wasn't the best month ever for the Dow like during like the Great Depression, like
Yeah, you have
on a percentage
like
basis. Yeah,
crazy rebounds in bear markets.
Right.
Absolutely.
Right.
You also
During a
have
lot of-
huge months in early in bull markets as well.
It's called initiation.
It's called an initiation thrust. Yes.
That's what this feels like.
Yeah. The stat you're looking for is not the big months. You're looking for the biggest days in the history of the stock market. They all come in crashes.
Yeah, good point.
Right?
Yeah. You're probably not going to see the biggest months. It's very short term.
Yeah, you'll probably see the best weeks probably up there in a lot of the crashes too. But the best months is true, that's not a market crash phenomenon. But the best days ever, definitely a market.
And it's
crash
hard to
phenomenon.
tell because the best days ever can also be initiation and will be. You just don't know without hindsight.
No, the best 100% of the best days ever are all in crashes.
I remember October of last year saying on Twitter, "Boy, this doesn't feel like bear market behavior when we were just thrusting off the lows in October after the
What, the S&P? Well, S&P was what? How much?
It was just one day.
Right. Up like how much?
That monster bullish engulfing candle.
Yeah, what is it? 2.5%, something like that. It was up a lot, but like the best days ever are like 7%, 8%. It
was one of the widest ranges. You have to use the average true range. So anyway, everybody came on Twitter and was like, "No, this is actually exactly what you see in bear markets," and they were right. But it's also what you see at the beginning of bull markets. You just don't know.
At the end, in the back of the Stock Traders Almanac, if you go like to the back pages, it has all of those. You'll see. It's fun to take a peek at there. I do every year. Can't help myself.
Where's Todd Gordon?
I told Todd to come on closer to 9:10 because I wasn't sure how long Louis was going to hang out for. So Todd will be here in like 2 minutes.
Sure. And then can we throw up that Dow chart though? Because I mean, Strazza said it. It's one of the best sticks out there in the world's most important stock market index. So
just the Dow moving that much. This is the Dow. Low volatility stocks, quality names. A huge move.
Huge move, man. And say what you want. Fun fact, the Dow Jones Industrial Average is the most diversified of all of those major indexes. People laugh when I say that because it's only 30 stocks, but it's a big difference in the profile of these companies.
Someone keeps asking about BABA, and it's annoying. Chart's terrible. Nothing to say. That's why we don't talk about it.
There's nothing to talk about.
Not the only new thing about BABA is it's no longer the most valuable U.S. listed Chinese internet stock. Right now, it's a PDD. Yeah, you know me. So
this thing looks like it wants new all-time lows so bad. Looks terrible, this chart. And there are actually some decent opportunities starting to shape up in China. This is just not one of them. I do agree, JC. Harsh or true?
It's not harsh. I mean, you're just talking facts. Like, if anybody takes offense to that, like, whatever. We don't care who Jack Ma is, or if nobody can find them. Like, we don't. Like, doesn't matter. This doesn't matter to us. Like, we're not.
He's been found, for the record.
Whatever. Great. No, like, how, like, over there, like, they love this guy. I don't give a damn. Like, I don't hate him. I don't like. I don't know nothing. I don't know nothing about no Godfather.
Look at this juicy stuff. Speaking of monster monthlies, Pin Dow up 45% monster monthly candle, had a huge earnings beat. Fun fact, PDD was the one who reported BABA to the Chinese government for what?
I don't know.
Spicy stuff. The Chinese gossip, that's quite the right.
I got no idea.
Should we bring there's a whole nother level. They take the Kardashians to like
who knows what's real.
Should we just bring Todd on?
Can we please?
All right. Todd Gordon is here, CNBC contributor, founder of Trading Analysis and Inside Edge Capital, and he's here right now with charts of his own. Let's see what he's got.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey now.
Hey, Todd.
Hey. How's it going, guys?
How nice of you to take some time away from the slopes to join us mere mortals down here at ground level.
Are you kidding me? We're up in the woods here, man. I'm missing what's happening in the real world.
Dude, how many days you get in on the slopes already? It's only December 1st. How many days you get in?
0.
Really?
0. And it's been so much work. We're heading to Killington for 2 days tomorrow and Sunday. I'm coaching the kids. My kids are on the race team. I've got 12 new pairs of skis. I got to mount them all with bindings, tune them. It's going to be a busy Friday after about 12 o'clock here today. So ski season starts tomorrow. When are you going to get when are you going to get your kids going, JC?
I'm going to get the 3-year-old out this year. You and I discussed it. The infants still aren't standing up yet, so I don't think skiing's in the cards this winter.
Backpack it. Just throw them in a backpack.
Yeah, but I got 2 of them, man.
Dude, very few people understand what it's like to roll with two infants.
Me and Todd Gordon, we have conversations.
Different world, man. Twins are a different world.
Dude, like if you only have 2 kids, like are you even a parent? Like are you even like what are you even right? Like come on.
And I'm not mitigating when somebody has a kid for the first time, like it rocks your world. But my poor daughter, she's 5 now. Like she's almost neglected. 1 is easy compared to 2. Like I love her, she's amazing, but it's like this is nothing compared to twins.
I'm taking a 3-year-old to the city for the first time. I'm gonna do Rockhead,
awesome.
the tree, steakhouse,
Dude,
yeah.
It's so cool to see the kids' eyes light up around the holiday time, especially in New York City. It's the best. It's absolutely so cool to be around Rockefeller Center, see the tree and ice.
Can't wait to get out of Rockefeller Center and hit the steakhouse, but that's another story.
When are you
so Todd Gordon, we are seeing new all-time highs in technology, semiconductors, second highest close in the history of the Dow Jones Industrial Average. S&P 500 is up 30% off the lows last October. The NASDAQ's up 50%. Technology's up 60%. And I got people telling me, I swear to God, I got people telling me that this has been a bear market. Can we bring some intelligence to the conversation?
I don't know what to say. I don't know what to say. I love it. The amount of bearishness out there has just been real, and it's just only fueling the rally, and it's making, in terms of a shorter trading time frame, tough because this thing just keeps gapping up without any real pullbacks, right? I mean, we're starting to see a little bit of a large cap growth pullback here, which would be great because finally some people can get in, but even now they're starting to bid that back. Nvidia's trying to sell off, tech's trying to sell off a little bit. Last couple of days, if you notice, like large cap growth was high in the open, and then it sort of pulled back and then right back up. Like they're just not letting anyone in, so they're just punishing the bears.
So yesterday's home runs don't win today's ball games, right? That's what we learned from Babe Ruth, and we have a lot of investors that work with us that have done very, very well, and we've all been there. We've been on both sides, been doing very well, we've done poorly, but one thing I could tell you for sure, certainly about myself and a lot of investors, and you do a lot of psychology work and things and trading work and stuff like that, Todd, is that anchoring bias. Oh, but I bought it a year ago at this price, so I have all this, all this P&L and, anchoring to the money you made over the last year and the profits that you had. That is a very, very, very easy way to get distracted and give a lot of that money back instead of just starting from scratch and looking at the market moving forward, forgetting all the things you did over the last year or forgetting all the things you didn't do, right? There's a lot of people who missed the 60% move in technology and 50% move in the Qs and 30% in the S&P. A lot of people missed that. So putting that to bed and thinking forward as well, whether you were successful or not, I think is really important, right? So let's talk about that. Forget the past.
Yeah.
Like, how are we thinking moving forward? What type of market environment are we in? What type of strategy should we be incorporating in this market?
Yeah, I mean, I think there's 2 parts of that question. That's interesting question, conversation. Like, I think to be a trader, to be a portfolio manager, like I'm constantly, looking over my left and right shoulder. Like I think you and I are probably, your team and mine, probably 2 of the most unapologetic bulls out there. And, I've tried to get out there on Twitter and stir it up and piss off the bears. It's really fun because they get angry. But I'm constantly looking over my left and right shoulder, constantly reassessing my positions, always looking where I'm going to be wrong. You always have to leave yourself an out. You trade with your convictions, but you you never fall in love with your outlook, and you're always second guessing yourself. And that for forums like this where you can have long thought out conversations and you're looking left and right over your shoulders, that's great. But for the short soundbite stuff where you're like, oh, boom, I'm bullish, I'm bearish. Well, it's a lot more nuanced. But for the people who missed and are chasing, yeah, it sucks. But I would also say there's a lot. I believe there's a lot more room to go. I think there's still a ton of cash that is not invested. I still think there's some fast money that is short. I'm waiting for the new Q3 money market figures to come out. I think it's like just under $6 trillion. They only have Q2 figures. There's so much money in the money markets making that 4 or 5% return. And I think once the market realizes that this rally is not predicated on the idea that the Fed has to cut in 2024, where in fact we have an economy that's growing strong, earnings are beating, CEOs are setting the bar very low in earnings and then over delivering. I hope the Fed doesn't cut. So I think once the market realizes all of that, and I could be wrong, and again, I'm looking over both shoulders, but I think this thing rips. And guys, I mean, I run money for a wealth management business. Guys, I could be out of everything and short like in an hour. So I'm not like a long only mandated guy. Like I'm a two-way trader. So I'm bullish.
And what are the types of things you are looking for that would invalidate that bullish thesis and approach to the marketplace?
Yeah, if it's not the Fed, I mean, what could it be?
Well, that's it. That's it, Strazza. Like, I think the saying that I love is you never get hit by the train you see coming. Yeah, so right. We could sit here and pontificate about, or we could project what might be coming around the bend. You have no idea. But I mean, that's why we're just constantly keeping an eye on things. And I don't know, but as long as you're executing on your game plan, like I founded my wealth management business Inside Edge Capital on the idea, like ski racing guys, like before you jump in the gate and you're doing your 1 minute run at 50 miles an hour, there's hours of prep and inspection of the course, like building your game plan, right? Well, when you're in the race, something's going to pop up and you need to be operating your game plan, and then you can account for that variable. So I look at it like that. Like, as long as your bases are covered now, whatever comes around the bend, we're operating on our game plan. We can deal with it.
Yeah.
Sorry to dodge that answer, but I have no idea what's going to.
No, I think it's a good answer.
That's actually a fantastic answer. You know why it's a fantastic answer? Because it's true. You're 100% right. Like, yeah.
I don't know. I mean, what worse crap could be happening? It's horrible, personal conflicts going on around the world. Horrible things. We had 4-decade high inflation, rates ripped, Fed's gone crazy. I mean, there's so many things working against this market, and I do feel bad for the investors out there who are falling in, just being sort of swayed so sharply by the attention-grabbing headlines. It's no wonder a lot of people are missing this rally. It really takes a lot of experience to set that aside.
But it's hard to feel bad for these people, because if it wasn't for those people, we wouldn't be making as much money. Right?
100%.
Because there's a big positioning aspect of it too, and the fact that positioning has been so skewed on the opposite end. I mean, coming into the year, Wall Street strategists at a consensus where that the market was going to go down.
Yeah. I mean,
consensus.
And I even gauge.
If it wasn't for that, would we have made this much money?
No, I mean, the minute 10-year yields topped out at 5.05 or whatever it was, freaking XLRE and home builders were literally crashing higher.
Yeah.
Wait, and we're going into a housing crash? Like, wait, what? Yeah. Like, they literally were XLRE, the ETF, the sector was gapping higher. Yeah. Like, something doesn't square up with the headlines here.
And how about small caps really getting going here relative to large, on an absolute basis, definitely putting up, what was it up? What was small caps up for the month of November? Small caps were up 9.2%. Micro caps were up 9.5%.
This is interesting. I'm gonna flip the script and be the interviewer here. I don't know if I care. And let me tell you why, because I did a little study on the Russell 2000. I don't have the stats right here, but of the 2,000 stocks, I think in the trailing 12 months, I think like 800 or 900 of them had negative earnings, negative growth. Over 40% of the Russell 2000 are not profitable. They're shell companies, and when they do jack up interest rates and they haven't hedged off borrowing costs, like do I want those stocks to rally? Do I need to feel good when small cap, sub $2 billion market cap companies who aren't profitable and can't face 4 or 5% borrowing costs don't rally? Like I don't understand the argument. And I found an ETF called CAF, and I'll shut up right now. CALF. It's like the best free cash flow stocks within the Russell 2000. That thing's not even close to a bear market. So like, why do we care if the small caps have to perform with huge large caps that are making ridiculous amounts of money while improving their margins? Like,
they
why?
don't.
I don't get it.
Well, they don't. We know they don't. When you study bull markets in the past, in a lot of those bull markets, small caps underperform, right? So they don't have to be the leaders. They don't have to keep up with the large caps. They're, like we always say, they're always kicking out their best players, right? They're small caps by definition. Apple's bigger than the entire Russell 2000. So's Microsoft. Guess what? There's going to be a lot more names coming. You better get used to it, because small caps by definition are small cap. They're never going to get bigger, because if they do, they get moved into other indexes. Right?
And I just put a note out to my team, and this is just something I'm not prepped. I want to think about it. Like, everyone's saying that, okay, the returns in the market over the last 12, 24 months driven by the Mag 7. But if you look at the amount of stocks up in this year relative to where the S&P is, I think there's probably 230 stocks that have a return better than the S&P 500's
anybody
return.
who says that, Todd, anybody who says that is just either really, really bad at basic math, or hasn't actually taken the time to even look.
I haven't. And I want to put some efforts behind it and figure it out, because wait, is it the large caps' fault that they're so big and they're driving a market cap weighted index? What about the 200 stocks that outperform the return of the S&P? What do you mean? And I sent a bunch of charts to you guys, but we're having such a fun conversation. Like, the other thing we're seeing here in the last 2 weeks on the relative rotation graphs is I like to look at growth value ETFs and then look at the market cap. Small, medium, and large. You're seeing two things starting to rotate up relative to the benchmarks, which are mid cap growth and even small cap growth. So now those who are, citing the lack of breadth on this rally, now we're starting to get an increase in participation of those mid cap growths. And again, those last couple of days where the market was up, NASDAQ was up 8, 9 tenths. And then it faded into the close. Like, they're kind of selling large cap tech a little bit, but the mid caps, 25 bill, 50 bill, 100 bill, 200 billion, those guys are hanging in here right now. So I think we need to broaden out and start to look in that group. And those guys are hanging in really, really well right now.
Yeah,
no,
you make
100%
a great point. Like, about the small caps, you need some sort of a value filter. I think CAF is a cool idea, right? That's just a quality or a value filter on top of this huge universe of mostly crappy stocks. And if you zoom out to the 90s and something like the value line index, which shows you what the median stock does, most stocks have pretty much done nothing for 25 years. There are huge leaders within small caps. You just got to find them. They're
100%. Like, wait, I mean, I don't want to be in an environment where everything's going up, and every ICO, I don't even remember. I forgot what they're called, ICOs. Like, I don't want everything going up. It needs to run a bubble. Like, I hope the Fed doesn't cut next year. Leave them at 5%. Is the economy is resilient enough? Not everyone is going to succeed in that environment, and that's good for us because there's so many wealth managers out there just resting on their, just focusing on asset gathering and just indexing it, making money. No, man, this is where you got to go to work and you got to find the best stocks to trade. And when the facts change, whenever that may be, you got to rotate out and protect.
Yeah. And it could be as simple as, like, if you're fishing for names in small or mid cap world, and you really don't have these problems nearly as much in the mid cap space. But when you're fishing for opportunities in small caps, one simple way, one real easy quality filter, something like momentum or relative strength. Look at the ones that are going up. Look at the ones that are leading.
For sure.
They're probably not the unprofitable ones or the ones that can't withstand 5-6% interest rates.
100%. Take a look at, like, I'm out of it right now, so I'm drinking Jocko's drink. But Celsius, CELH, I mean, stuff is ridiculously good. It was, I don't know, $3-4 billion market cap company. They're taking market share from Monster. Chart looks amazing. Beating earnings 50%. Like, that's a small cap if you just do your technicals with your fundamentals. And I know JC you'll push back on me in that because I know your technicals only, but I think when you do find a couple fundamental filters and you can marry it up with technicals, like that's how you pick stocks. Like this stock is just crushing it, just absolutely crushing, taking market share from Monster. There are small caps out there that if you do your work, Strazza, like you get rewarded.
Yeah, Celsius is a good one. During 2020 and 2021, I'm not going to lie, I thought that was like a crypto stock. I like put it in my
exactly.
No, I think I thought that too. Like, isn't there a Celsius crypto? Like,
yeah. So I was confused.
Yeah,
but
I can see that.
Anyway,
all right, so Todd, listen, Todd. I got one more for you, Todd.
Yeah. Also, Todd has mad charts he can share with us as well. I just want to preface that.
Dude, I made a whole report for you guys.
I know. I want to share.
You made your report for yourself because you do these sorts of things, you nerd, and you
just
happen to be sharing.
I almost put the stock what's the name? Stock Market TV logo on this report for you. I just fell short on time. That's how much this is made for you.
Dude, you're the man. Let me ask you something. Before you run, you talk to a lot of investors, your clients, potential investors. What sort of stuff are you hearing in terms of like what they're excited about? Are you hearing about what they're scared about? And how are you addressing those things?
You know, one thing that I could talk about. Do we have time to share one answer?
Yeah. I want to. Really, because you bring that unique perspective. We talk to different types of people.
Yeah. Spencer, can I get? I think it's number 7 for you. It's the real yield curve and nominal yield curve.
Nerd alert.
There it is.
So
good.
What people may be concerned about, and I think what they should be concerned about is I'm a little concerned with the 10-year. And let me just build this up for a sec. Or do we have a hard out? Do I have to shut up soon for the open?
No.
I am a little concerned about the 10-year yield dropping lower. I don't want to see it get too much lower. And I think on the headlines, because everyone was told, oh, high 10-year yield, high long end curve or long end rates rotate out of growth into value, pressures valuations. Great. Now that we see the 10-year yield dropping, and I think we're starting to threaten like the 4.4, 4.5 area, that's going to be the high from October 22. I don't want to see the 10-year yield start dropping 4.2, 4.1, 4.0, because then that's going to bring the freaking recession conversation back on the table, and we're going to have to contend with that. I want yields to stay where they are. And the more it drops, that 10-year yield, while the Fed doesn't cut rates in the short end, that's going to further invert the yield curve, which is at the top. So that's the 10-2 nominal. As that 10-year yield keeps dropping and the 2 years on hold, because the Fed, I hope they're not going to cut anytime soon, and I hope they don't cut until the time that they have to cut.
Market's got them cutting in Q2?
I think they're out of their mind. I think
whether they are out of their mind or not, that's what the market's pricing in, right? Q2?
It's Q1.
Yeah. And now I think it's May is the first cut. And now I think in the last 2 days, I was in Florida last week, so I'm a little out of the flow. I think they've got 5 cuts priced in next year. I'm like, why? Like, why? I mean, how the consumer's still good, housing's good. Like, what? I cut when you have to. So I think the thing that people will be talking about is if the 10-year yield continues to drop, does that bring the recession conversation back on the table? And to your earlier point, GC, like, that's going to leave more people on the sidelines that are going to have to chase higher and push markets higher later. But what's cool is if you look at the real yield curve, and this is what I really like, because now all of a sudden we have inflation. You can't say, mortgage rates are, 7.5%. But if your loan to service the loan is being inflated away at 4%, your real cost to borrow is 3.5. So the real yield curve just went positive. It's starting to back off a little bit. That's the lower chart. So the real 10-2 yield curve with inflation expectation priced in is now positive.
By the way, in the 80s, once the yield curve turned positive and stayed positive, the stocks did great.
I have a study also prep for you, looking at the real yield curve since like the 70s. Like people like, oh, sell stocks. Wrong. It's positive return in 12 and 24 months after the yield curve is inverted and it goes into positive territory. It's wrong. So to answer your question, I hope yields don't drop too much during that recession. I love the dollar lower. Dollar lower has been great for the stock market.
Thank you, Todd. It took you long enough to come around. I love you.
You and I debated it. I was wrong. You were right on that
Finally.
one.
Yeah.
How about yield sideways, Todd?
I would love it. That's
scenario?
ideal.
That is the best case scenario. Yes.
Let's get crude just range bound 60 to 70, 75. Let's get 10-year yield 4.4. Let's get the dollar, like euro dollar 105, 107. Let's stop talking. All we've been doing is talking macro the last 2 years, and I'm kind of tired of it.
Yeah,
I'm not. Let's keep it going.
I want to just go to trading earnings and fundamentals and technicals on the stock market.
No.
I love macro. I traded for an FX hedge fund during the GFC, but I'm sick of macro.
Speaking of nerd alert,
it starts and ends with the macro, Todd.
Dude,
Embrace
I know.
it, brother. Embrace
it. But it's been a little too much. Like trying to explain yield curve and nominal real yield curve to average investors. Like I'm kind of over it.
Well, don't do that. You're just setting yourself up for disaster. You don't need to do that. You can talk to yield curves with us, right? You don't need to talk to investors about that. Don't worry about that. Yeah, keep that in your back pocket.
Hey, I only get invited every couple months to talk to you guys, so it's lonely in between then.
All right. Well, whatever you want, you feel the need to kind of get something off your chest that you think is like major nerd alert, just ping us. You're always open in.
I like you, but I think Strazza is my guy. Strazza is more dorky like I am.
That's it. Talk yields all day.
I know.
Before you go, we're asking everybody this. What's your favorite sector?
What time frame? What time frame?
Yeah. I'm doing a lot of work subsector. I'm getting down in the industry groups like within tech. There's two groups that are starting to overtake semis, which are application software and system software. Synopsys, SNPS just put out earnings, but watch system software like ServiceNow, Palo Alto. Those guys are ripping within Microsoft. And then consumer discretionary, you guys mentioned it. Consumer discretionary has been the one holdout for the growth trade, fully rotating in. But there's a few that are coming up. Home builders look amazing. Hotel and leisure. A few other groups within consumer discretionary. I really would like to see XLY start to join the growth trade rally. I think that's going to be the catch-up trade next year.
Yep. Love it.
Todd, are you cool if we share all these slides since we only covered a couple of them? Are you cool?
If you share them?
100%. 100%.
All right. If you want,
and one that I do want you guys to look at, and Strazza, I'm interested what you think. Like, I see the gold breakout. I understand the macro, rates down, dollar down, but with real yields moving up, there's a strong inverse relation with gold. So I just caution. I got stopped at once. I might try it again, but we just got to watch those real yields going up. There's a pretty good inverse relation there with that. I forgot what chart number it is there. It's number should be 8, I think.
Okay.
Oh, those are the gold miners that are moving.
Yeah, gold's just getting ready, it seems, still.
You think it goes or no?
Not yet.
Highest monthly close in history. You're not entertained?
Nope.
So there it is. So right is the 10-year real yield. So 10-year expected inflation into the nominal yield, and then gold left scale inverted. So real yields are going up, but gold is trying to break out, which again, that is the chart going down. The left scale is 2,000, 2,100.
When I look at a chart of gold, it's at a perfect level to get rejected here and catch back up to this relationship.
Very possibly. Like gold's annoying to me. There's so much opportunity cost lost with investors being long gold since like 2018. Like I hope it just goes quiet.
Probably a lot longer than that there, Todd. You're being nice.
Well, I think it was outperforming into like 7, 8, 9, 10, maybe into 15, 16, 17 is when it calmed down. I hope gold really quiets down and the focus is in crypto. I think that would be much better.
I think gold's going to start ripping, especially if the dollar's weak, stocks are doing well. Gold's probably going to do well in that environment too. I think everybody's making money. Everybody's making money.
Even the gold
crypto, gold, stocks, everybody's making money. Except the people bragging about their 4.5% in their money market accounts. Those people are just sad.
and making 1.5% real yield and giving up
exactly on a real basis.
All this earnings growth that we're seeing. I can't wait for Q4 earnings.
Yep. I think that those people are the ones that are going to lose the most. And you hear them bragging about their 4.5% nominal. I think that continues to be the worst trade.
It just feel, I know, and there's nothing wrong. And it depends on listen, when you're running money, like your buckets, like you have money that with different time frames, like how far out you're going to need it. And that's solid if it's money that's 2 to 3 to 4 year time frame. But if it's longer term, the opportunity cost is massive, not being invested right now.
But what I'm not, and it's not that I'm picking on those people. I'm saying that is good for us who own stocks.
Correct. Yeah.
All of that money increases the squeeze higher, right?
Yeah.
Record, like you started out this, be like, I can't wait to see the latest money market numbers because right? Yeah. Why are you saying that? Because you think it's high, because that is a catalyst and a tailwind for our portfolio. So 100%. Their loss and opportunity cost is money in our pockets, and this is a selfish endeavor.
100%. I mean, yeah. I've got long term. I'm very, very bullish, and so far it's been right. I think I'm a big believer. I think crypto is a symptomatic of what is happening with generative AI. I think companies across all different sectors are becoming much more efficient. Margins are getting increased. That's why valuations are moving higher. Because companies are operating more efficiently. This is the second or third real tech boom that we're in. Again, I'm not a perma bull banging the table, man. I could be out in short, as I said, in an hour. But I'm pretty bullish on what's happening here. And the more people that hate on this for the macro reasons we talked about, like you said, it's just more fuel for the fire.
Love it, Todd.
All right.
Always a pleasure.
Todd Gordon, guys, CNBC contributor, founder of Trading Analysis, founder of Inside Edge Capital. Todd, thanks a lot, guys. If you want Todd's charts, email us. I'll throw the email up on the screen. Just do me a solid and put like Todd's charts or something in the subject, and I'll put it on the screen, and then you can get them. So thanks a lot, Todd. Have a good one.
Hey, guys, thanks so much. Have a great weekend.
All right.
You too.
Thanks, Todd. Adios.
All right. Yeah, here's the email.
Yeah.
You
talk about how everybody's making money. It was even one of the best months in years for the 60-40 folks.
Yeah, bonds had it. But was it a coincidence that when bonds stopped crashing, stocks did well? You know what I mean?
They've been having a tough time. Good month.
Stocks and bonds have been positively correlated. All right, listen, that was an awesome conversation with Todd, by the way. He brings a good perspective. I am heading to the city, taking my daughter to New York City and playing hooky for the rest of the day. So try not to break anything while I'm gone, guys, in this market. Let this bull market continue while I'm gallivanting in the city. I'm very excited for me, Strazza.
I'm very excited for Alexander.
Yeah, I'm excited for
Are you hitting one? Are the Christmas markets up yet? The holiday markets, are they up yet, or is it too early?
Probably.
I don't know. I don't know when they start.
Holiday markets. What is that?
Yeah, like Bryant Park pop-up markets.
Oh yeah, we're gonna go see the tree, Rockefeller. We're gonna go do that. It's up. The lighting of the tree was a few days ago.
Yeah, and I would think yes, sir.
What's the big market downtown? Shoot. I was there last year. Damn, what's the?
Are you taking the train with her or driving?
No, we're driving. All right, guys. Adios.
Have fun.
Right. See, by the way, there's nothing wrong with being excited for 4.5% in your savings account, right? Like
when technology's putting up a 60 spot, yeah, that's a shit.
Okay. As long as you have other investments, but still, there was nothing.
It's been a terrible trade. There's no excuse.
First time in my life that I've actually been making money in my savings and checking accounts, right? But again, that's not my investment account. Different things, but anyway,
you're not wrong.
Thank you. Yeah, thank you, Steve.
I'm getting 5% in my Solana money market. So
there you go. And thank you, Rachel. Union Squares. That's what I was thinking of. That's a very large outdoor market for the holidays. Yeah, Bryant Park is nice. Bryant Park is too crowded for me. It's too many people. That's New York. That's New York for you. That's the city.
The whole city. The whole city and everything about it, and most things around it are too crowded for me.
City is yes, yeah.
January.
Here I am complaining about crowds in Manhattan, right? Yeah. Okay. What's going on with Path, Jonathan? It was earnings. I think they had earned. I mean, it's up 15% or what?
Let me guess. It's higher because the reaction to earnings was in the direction of the underlying trend.
There you go.
Oh Look at that.
There you
You
go.
got your base breakout. Boom.
Yeah. All right.
talking
Let's talk about a couple of headlines, Steve. Now that JC is gone, we'll talk about the fun stuff. We can talk Disney for a second here. This is a very interestingly phrased press release. I'll just read you straight from the PR. The Walt Disney Board of Directors today announced a cash dividend of 30 cents per share in respect of the second half of the fiscal year 23, payable January 10th, 24. They didn't reinstate a dividend. They didn't say anything about the dividend being quarterly or annual. They declared a dividend. So I think this is like a one-time thing. I don't think.
When did they suspend it, or did they just stop it altogether?
They suspended it for COVID.
Been that long?
Yeah.
They haven't paid a dividend for years.
Everyone not everyone. A lot of people suspended their dividends during COVID.
And a lot of people didn't. Wow. Okay. I didn't know it had been that long. That's terrible. Yeah, this is a special. Does this have anything to do with Nelson Peltz?
It all is related, right? He's he's been engaging in this proxy battle because he's got
tired of losing money.
He's got Ike Perlmutter's shares with him. But he's working on board. He's trying to get board seats and all that. But this is probably part of that.
He's probably looking for a spinoff too, because he's been in this for a while now, Spencer.
Yeah,
and he can't be having a good time. Chart's been straight down.
No one is. No one is. I have a feeling we'll be talking Disney with one of our guests next week, so we'll save the conversation for that. We talked about Pfizer, Disney. Let's see. Supermicro, right? The quantum computing. They're doing an offering, big offering, over 2 million shares at $262 a share. So that's why his stock is down this morning. We had earnings from Ulta, ULTA. It was I think they raised the low end of their guidance. And so what was the stock up last I checked? Yeah. Well, it wasn't like a huge beat, but it was a beat nonetheless. And yeah, I was right. They raised the low end of their guidance. So in the pre-market, it was up 15%. I don't know what it's doing since the open. All right, up 10% now.
What else?
Big gainer of the day is Elastic earnings as well. ESTC up 30%. Sheesh. What else? Yeah. UiPath. I don't know what they do. I'll be honest. Up 20% on their report. I think we have a couple of these charts, by the way. I think we may have the
cold flags. These coils that we've been talking about are breaking out. You're slowly seeing it. Sorry, it's just important.
You know what stock came across my radar for the first time in a couple months? Yesterday or the day before was VinFast, VFS.
Yeah, it's squeezed.
Yeah,
it's been squeezing.
Yeah. Well, it's over now, but it was yesterday. Squeezed to 11 in the pre-market yesterday.
It was on our squeeze report. We were talking about the other day. I saw it on there. There's some sort of base shaping up there. I mean, look, it's down 90% from its highs. So yeah, I think you could start looking at it if this is one you wanted on your radar.
I don't know.
It got that much needed post IPO haircut out of the way pretty quickly. It seems.
Yeah.
Imagine if underwriters just did a better job.
I don't know who you blame for this.
No, you can't blame anybody. Everybody, it's just the way it's always going to be.
Right. So yeah, what's the float here? I don't know. Not large. How many shares outstanding are there? Come on.
But it is a good thing to know.
There's a lot of shares outstanding. Okay.
You find out with experience once you've traded enough of these IPOs, and you stop and you wait to see something like this that you just saw in VinFast. I know this was an extreme example, but go look at Coinbase. Go look at any of those IPOs from several years ago. Go look at Meta.
Yeah.
Facebook.
You know what's interesting is we just hadn't had one of these IPO squeezes in a year and a half, maybe 2 years. But it is normal, like you said. Like this does happen with somewhat regularity. It was just happening all the time in 2021, right? Like for everything. So
It's always going to happen. It is
Yeah.
the underwriter's job to get as much money as they can when these companies come to market. If you think that this is something that, you know, good companies are immune to, I would say go back and look at the Meta chart in 2012. In the because this is one of the greatest companies that we have in the stock market today, right? Top 5 in size, 6, 7. So Facebook, after its IPO, in the 3 months following, it fell 60%.
Yeah.
Doesn't mean it's a bad company. Doesn't mean it's a bad stock. It's just there's going to be a massive haircut there off the IPO price. Sometimes it happens quick. Sometimes it happens over time. Like we had this extended bear market wave and all those IPO stocks in 20 and 21, right? But you always want to wait, be patient, let it get hit, let a base form, and then if it's something you're interested in, then participate. But running out and buying, you know, freshly issued shares on the IPO day is just never a winning strategy.
Another great example, I'm sure you're aware of, is Uber, right? It took Uber 2 years to make no, not 2 years. It took them 1 year to make a new all-time high from the IPO. So
percent drawdown.
Yeah.
After the IPO.
Yeah. Hey, do you want to talk about McDonald's? I saw you talking about
do.
McDonald's. Yeah. All right. I actually saw this. I saw this article yesterday. I didn't read it until you slacked it this morning. I just read the headline. And I thought, this doesn't interest me. But so I read the article and so essentially McDonald's is like tweaking how they make their burgers. In an
6
effort.
years. 6 years of research on how to make the burgers better. How cool is that?
That one quote jumped out to me from the article, which was from Chris Young, the senior director of global menu strategy. We can do it quick, fast, and safe, but it doesn't necessarily taste great. So we want to incorporate quality into where we're at. Yeah, you think? You want your food to taste good? Wow, I'm stunned.
So they've gone through stuff like this in the past. It seems like if you read the article, it's cool. It gives like a history of the changes to the burgers over the years. And back in the 90s, they went like hard into efficiency, right? And really tried to become like, you know, just smooth operating fast food machine. And they stopped toasting the buns. And then people started complaining that the buns weren't toasted. So they went back eventually to toasting the buns. They're constantly kind of doing this, changing stuff up. I didn't know this, but McDonald's was apparently known for, in its early days, for grilling the onions on the burger. And over time, they got away from that, where they're just like throwing cold onions on top, right, when they serve it. So some of the big changes are they're going to go back to grilling the onions when they cook the burger. They're going to like sprinkle some onions on and cook them with the meat. They're going to switch to a brioche bun. It's going to be thicker, and he said,
it's going to be bougie now. Okay.
I don't know if I like the brioche bun, but I am excited to try it. Apparently, all these changes should roll out. They're already happening in the West Coast. They'll roll out by like Q1 of next year. So we'll do like a live burger review. Another big change, they're going to melt the cheese. Right? You ever get like a quarter pounder and like the cheese is like cold and
I cannot even tell you the last time I had a burger from McDonald's. Oh wait, yes I can. Yes I can. A month ago when I was with you guys.
How about
besides that?
Yeah, it's bullshit.
Besides that,
we're pro McDonald's here at All Star Charts and Stock Market Media. The Big Mac will have more Big Mac sauce. What? We are.
Yeah, I think this is funny that McDonald's is like trying to compete. You know, they're trying to say like, oh, like think of our burgers in the same breath as like a Five Guys or one of these gourmet.
That's fine. They do compete. Would you rather be McDonald's or Five Guys? Which one's making, you know, tens of billions of dollars a year selling burgers, and which one, you know?
Yeah. But by the way, Jerry Edwards, who just dropped a book about IPO trading in the chat, I'm familiar with the authors of that book. We can get them on the show. These people who did a study on trading IPOs.
Oh, yeah. You know them.
Yeah, we know them.
We'll do that.
Yeah.
Did you read the stat about how many Americans eat a McDonald's?
No, I didn't. I didn't. Was it in the? I didn't read the whole article, so no. If it was in there,
it was something like mind blowing. Like 7 out of every 10 Americans eats like a fast food burger once a week.
No way! What?
Dude, I'll find it. Maybe it was once a month. It is an alarmingly high number, and I know this is based on survey data. Who knows? Whoever they're taking that survey would really matter, I think.
Okay, I found it. An estimated 68% of Americans eat burgers at fast food restaurants at least once a month, according to market research from Data Central. All right, that I believe.
70% eat fast food, basically.
That I believe. Yeah, I believe that for sure. Once a month, for sure. Definitely.
Sometimes you got to do it. You're just hungry, and it's there. You're in an airport. You're in a rush, and the burger smells so good, and you're walking by, and you just have to stop.
Yeah, it's the airports. It's the airports for me. It's usually when most of my fast food is consumed in an airport.
It's the one thing I like about flying.
Yeah, for sure, definitely. Okay, that was fun. Anyway, McDonald's. We should maybe talk about the stock for a second. I mean, God, dear Lord, this thing is a monster.
It's really cool.
Yeah. I have a question, Steve. You know what I was doing this morning or last night and this morning? You guys were looking at your monthly charts. I got curious, but I don't know what to do with this information. Okay. So I was just really curious, and I was looking at I started with just the sectors that have outperformed the most this year. So I just started with technology, communication, and discretionary. And then I ended up going all the rest of them. But I was just curious, like the percentage of stocks in each sector that have like dramatically underperformed the broader sector. And I don't really know what to do with this information, but I was interested in it last night, right? Just trying to
this data.
Yeah. And
you're gonna find that the vast majority underperform whatever benchmark you're using, right?
Well, I'm looking at so in Excel, where should we like XLC, which only has 22 holdings in it, right? And 17 of them have, was it 17? No, it was more than that. Well, only so XLC, which is up what's it up this year? 45%, something like that. And 18 of those holdings have dramatically underperformed the index, right? Now that's an extreme example, right? But it started off with technology. I was just curious, like who is the worst of the best, right? And so that's kind of what got this going for me in my head. And again, I don't really know what to do with this information, but I was just curious. And first you look at who's down this year, like who in XLK is down this year, and there's 11 or 12 stocks that are down, and then you think, oh, okay, well, XLK is up 50%. So who is dramatically under 50%? And it's like a decent percentage, right? I don't know, 50 stocks.
I see a lot of solar.
Yeah, a lot of solar, but I'm really just like, it was more an exercise in curiosity. I don't really know how to make this actionable in any way. I don't
think. Yeah, I have some thoughts.
Okay.
I don't think the move would be, oh, hey, Solar Edge is down 70% year to date, and XLK is up 60% or whatever. Oh, there's a big catch-up trade there.
Yeah, right.
I'll explain why. I was waking up this morning, getting dressed in my room, and I have the CNBC on. Somebody comes on, and she says, Delta's our conviction pick or whatever for 2024. And then she says, it hasn't worked for like 10 years, but we think it's going to start working in 2024. And I'm just like, what? I'm laughing to myself. I'm thinking, if it hasn't worked for that long, in the case of Solar Edge, all year, you better tell me a really good reason for why that stock's going to start working and stop underperforming, right?
Yeah,
like if Solar Edge is down 70%, or if Enphase is down 60%, or this EPAM down 20%, Keysight down 20%, I think there's a 5G names now, there's probably a good reason. And to think that all of a sudden now that's going to be a winning stock or a leading stock, something should change, even if it's just like a trend reversal or relative trend reversal, right? There should be some sort of story as to why that underperformance is going to stop, because it's a trend at that point, right? If something's been underperforming or falling or not working for that long, that's a trend, and trends persist. So to make the bet that all of a sudden the loser is going to turn into a winner, I think is far tougher and frankly, a lower probability outcome of being right than making the bet that a winner will remain a winner.
Yeah.
usually a good damn reason why it's not a winner. We don't always know.
Yeah,
people.
Right. And so, look, and we've talked about this before. Most of these, at least in the sectors that are doing well this year, they're doing well because they're a little bit top heavy in the return distribution, right, of their holdings.
It's gonna be that way.
Right. It's all that's okay.
Right? The best players score the most points. Blah blah blah. Todd's own.
You're right. But I was more interested in the bottom, in the caboose, right, of these sectors, and just kind of looking at.
From my experience, the caboose, I like how you put that.
Yeah.
Is not a place you want to be.
No. I'm not going shopping. I'm just like, I kind of just want to see what, like, who's there and why are they there, right? Like, so you can see clear patterns, right? In like going back to like XLC, for example. You
Social
know,
media.
See clear patterns. It's like broadcast cable. It's like Paramount. It's AT&T, Fox, like cable, like Verizon, Comcast, right? Disney, all these cable provider companies, like they're all there, right there at the bottom. And
can I be honest?
Yeah. So
these stocks look so interesting right now.
T-Mobile is there. Yeah.
Verizon and AT&T,
Warner Brothers,
for the first time in like almost forever, don't look so terrible. You zoom in enough.
If you zoom
call
in
it
enough.
a bait. You zoom in enough.
Most things look good if you zoom out enough. I don't know if you want to zoom in enough.
They want the green walls back, Spencer.
No. This is way better.
They were bull market walls, though. Green like money.
No. This is way better. Neutral is the way to go. Neutral's the way to go. Oh my God, it's 9:57. Dear Lord. Okay.
On the bumper, then I want to take this question in the chat.
There was a couple of things I guess I'm not going to do that.
All right. Didn't I have a good recess? Was it the burgers? I forget. Run the bumper. Oh, did you see the uranium thing that I shared in the research channel? Do yourself a favor and look at that thread. It's hilarious.
Uranium. Okay.
The nuclear thread. Drop it in the chat for people.
No, I don't want. No, if you put in research, I'm not going to share it. The research, our research channel internally is publicly available for members of our portfolio program.
Not publicly available. Publicly available. Probably not the right way to put that.
Okay, fine. It is open to certain people who are members of of our program. I'll drop the link to that in the chat, but I'm not going to share it. If it's in there, I'm not going to share it with the broader people. Anyway, what's your recess?
Question from the chat.
Yeah.
I like listening about crypto, but I don't see the benefit of trading it versus stocks. Is there something else like bigger upside? Yeah, that's really it, right? In a bull market, if you move out on the risk spectrum as far as you can go, the idea and the logic behind anybody ever wanting to do that is that by taking on more risk and investing in some sort of a crypto asset, whether it's crypto equity or a coin, that by investing in something very risky, you're juicing your potential for a bigger return. Everything we do in markets is a risk-return equation, right? So you better, if you're going to go buy helium or something, right, which is a very risky asset, expect that you're going to make far more than you would just buying the SPY or the Qs. Feel me, Spencer? So that's the
I'm with you.
That's the simple logic there. It's for beta people, right?
All right.
Okay. My recess is UConn Huskies, baby. Looking so good. Undefeated. Really don't lose. No one has played the UConn men's basketball team closely since, February of last year, I feel like. Been blowing teams out, but this will be a really, big test for us. Pretty cool. Over at Kansas, they've been camping out for like days, getting ready for the game.
Wow.
Remember that, Spencer? Sure, they did that at Maryland.
Oh, man. Well, you know what, though? We did it, but we mostly did it for the Duke game.
Right.
I don't think I camped. I think the longest I waited for a non-Duke game was like, 3-4 hours. But we still like legit camp out overnight for the Duke game. No doubt about that.
I never actually did it, but I do. I mean, when Syracuse came to town or we played Texas one year, they were number one. Yeah, people were camping, and it was like I don't know, 10, 15, 20 degrees some of these days, and people are camping in tents in front of Gamble Pavilion. So that was cool to see. But Kansas, number 5, UConn, number 4, 9 o'clock tonight. I'm so pumped up. And I'm glad that men's basketball is back. I know you are too.
I am. My recess is I'm having my first Task Rabbit experience today. If anyone has ever used that before. I'm at my wit's end with a certain piece of furniture that I can't seem to assemble myself. So if anyone's ever used it, I'm just curious to get feedback. If you like good experience, bad experience, whatever.
Slack Rabbit? What is it called?
Task Rabbit.
Task Rabbit.
Yeah, you can hire people to do pretty much anything. If you want them to assemble furniture, if you want them to help you pack, if you want them to help you move, if you want them to help you unpack, like people will do basically anything on this site.
And what are you using it for?
I've got a piece of furniture that I can't seem to assemble myself, so I'm having it's like part of my desk here. So I'm going to have someone come over and do it for me. Will
they read and answer my emails for me?
They might. People all right. Vogtna says it's a great app. This is my first time using it, so I'll let you know how it goes. But all you do is you find the task you want to get done. You pick a person, you see when they're available, and you say, "Come to my house."
Yeah, but it's got to be a big city thing. You can't do that. I can't do that here, right?
Wait. I don't. Sam, do I have to tip? I already pay. I pay. It's all in the app, man. Do I have to tip on top?
What kind of scumbag are you? Do you have to tip? You have somebody come over and assemble your furniture? Yeah, you
I paid through the app. It's all I already paid for it.
God, terrible person you are. Tip the man.
No, I didn't say I wouldn't. I'm asking, is it appropriate? Like, I don't know. I've never used. Yes, I'll tip like an Uber driver, but like it's because the app prompts me to do it. If the app didn't prompt me, I probably wouldn't think about it. So maybe the app will prompt me. I know that I can tip. Am I supposed to tip? That's my question. Okay, fine. I guess the answer is yes. I'm supposed to tip. Yeah. Okay, then I all right, fine. I wasn't. I don't know. I don't know the norms of this. I've never done this before.
You're gonna have somebody come over and touch your dirty laundry and unpack your suitcase and not tip them? God.
All right. I mean, I hope the app will ask me for it then, because I don't know, because I don't have.
I want to know more about this. This is actually hilarious. Okay. Good. Let me know how it goes.
Right. He's coming over in a few hours. I'll let you know how it goes. All right. That'll be a wrap for us here today. Thanks to our guests. Thanks to Louis. Thanks to Todd. Thanks to all of you for hanging out. We're not doing What the Fic today. Mr. Ian Cully is somewhere in the Oregon mountains meditating or something. Not sure. But we'll be back next week. So that's it for us here on the channel for the week. Everyone have a great rest of your day. Have a great weekend. Enjoy. Get outside. Do whatever. Go make some money. And we'll catch you guys next week.
Watch these cryptos this weekend, everybody. The weekends are for the cryptos again, Spencer.
Weekends are for the crypto.
Weekends are here. All right. Bye, everybody.
Run it. I can't take no loss. I don't even know what it costs.